Hello and welcome to this video. Today I'm going to be doing a stock analysis on General Motors. Now if you don't know what they make cars and they own quite a lot of brands such as Chevy, Chrysler, Pontiac and so on and so forth. Now a reason I like this stock quite a lot at the moment is because they have just announced with Nvidia they are going to be making a joint self-drive car. Now I find this quite interesting. Also just the fact that recently we have seen that AI isn't that great at driving cars, but LiDAR technology is much better. Now, if you don't know what LiDAR is, it is light penetrating radar. So this means that a beam of light is sent out that we can't see. It is UV light or infrared, I believe, which then is received by a transmitter. But given the speed of which light travels, it is much easier to read, and of course, it is gonna be a better at dodging collisions than an AI who is anticipating on sensors. So maybe it's gonna be a combined take of that, but that I won't speculate in. Now, of course, we do also have some problems with American cars. In recently, also you can just see how much they're falling. It has fallen from 62 all the way down to 47, where we are trading now. But also just the fact of the tariffs that has been put on American cars in the EU, or at least the ones that are being anticipated given Trump's tariffs on European cars. Now, a Bloomberg and a Goldman Sachs study revealed that chances are, if the tariffs that are being anticipated, we are waiting, of course, to see tomorrow, and this is only the 1st of April today, but they are coming on Liberation Day tomorrow, that each American car will sell for $10,000 to $12,000 more each, which is quite crazy. And given that they primarily sell Chevy, that is their main brand, which is a nice brand, but it's not an expensive brand. It is, of course, one of the cheaper ones with Ford. So that increase of $10,000 is gonna hit their main customers quite a lot. Now, if we take a look at the stock overall, as you can see, it is quite a volatile stock. As you can see here, sometimes we see, but it has actually been performing quite nicely ever since 23, where it was down in 26. But then we also see these drops. We see, and they happen quite regularly, where we see these bottoms and these spikes down in the RSI. This isn't unnormal for a car company, but it happens quite a lot with General Motors recently. Not as bad as Ford, that was quite a lot worse. I also have analysis on that on my channel, so you can go check that out. So yeah, but we did see it topping out at $61 back in November of 24, and ever since then we have seen falling quite hard. And of course, ever since Donald Trump took office back in January, we have seen it falling a bit more. It of course did increase right after, but then he started talking and it fell ever since. And we have recently just seen this huge gap in the stock, which means there is quite high downwards momentum outside of the regular hours. Now, as you can see in pre-market today, it is also down 0.6%, but that is rarely anything. Now, the company is of course quite large. We see a market cap on $46 billion. Now, the earnings on this stock is quite nice. As you can see, they beat them regularly by 23%, 13%, 24%, and then we have this one by just 1%. But that is better than their main rival Ford, which doesn't beat it that greatly that many times and also fell short within the past year. Now, dividends on this stock is quite poor compared to their main competitor Ford. Now, these only have 1.03%, which is barely anything at all, while meanwhile Ford is 7.73%, which is quite crazy. So I don't really understand the methodology they go into this with, because a lot of large companies who gain a lot of money by selling a lot, of course, and not a small amount, of course, like Ferrari, they sell a few cars, but they get huge margins on each car. They don't pay out great dividends, but Ford and Volkswagen do. And General Motors doesn't, which I don't understand, because that is just another reason why you would go with other companies instead. Now, if we take a look at their annual income statements, as you can see, they perform quite nicely. And again, unlike Ford, they didn't have negative years. Ford lost money in 2021, no 2020 and 2022, and of course they didn't. But we do see their margins dropping quite sharply from 2021, where it was 7.8%, all the way to last year at 3.2%. Now, if we take a look at their seasonals, however, they do perform quite nicely. If we go back to 2010, as you can see, some years we see quite nice bounce. Recently in 21 and 24 we do see quite greatly, but we also have some years where they don't perform at all. Now, in 2011 and in 2022, as you see, minus 45%, almost a halving the stock. That is quite bad, of course. And then we see 18, 25, and 14, where of course they also lost money. But overall, it is usually around -2 to around this 16%. It is where it is most of the time, and I think that's where it's mostly realistic. But something that General Motors also have above Ford is they make some more high-end cars, which is quite better, but I still don't think it's gonna be a large number this year or the years to follow, simply because of the tariffs and just the Chinese cars flooding the market, both in Europe and chances are they're gonna get into US as well. Here you might think, but what about tariffs? Well, every single Chinese manufacturer is subsidized by the government, so chances are the Chinese government will subsidize them even more just to make sure that Chinese electric vehicles flood the market, which means that their demand will increase. Because they are great cars. I have driven them, they are goddamn amazing. Now, the technicals on this for the day is probably no surprise that it's a sell, but for the month it is a buy. Now, this might be a false buy, and the reason for that is we see this huge gap in the stock, both downwards and upwards, which means it is difficult for the technicals to give a positive reading. If we did see more candles on the way down here, this green one might also, 50-day moving average might be lower, and we also see this yellow one, the 200-day moving average, might also have been impacted more as they take root in the candlesticks here. So when we have gaps, it is more difficult for them to read and to make proper analysis. We also see gaps here. So we do have quite often gaps in the stock recently, which makes the technicals in this a bit more unreadable. But we are currently laying on a support line here. We do see the past few bottoms out here has been around this, as you can see, has been around this. We do, of course, also see some more down here where they tip out, bottom out even more, but we have this double bottom, it's called here, so it is quite interesting to see it's currently at. Maybe we are gonna see it increasing then back up to this top here, but we might not know. Well, that is of course for the time to tell. Now the analyst rating on this one is quite a lot better than the main competitor Ford. That was -1%. Here the average is +28%. And we have 13 strong buy, 4 buy, 10 hold, 0 sell, and 2 strong sells. Quite interesting actually that they are that different. But then again, they also estimated quite a lot better sales than Ford. Now, is 28% up realistic? I don't think it is. I think it should be about 0+%. I think it's gonna be where it's at now, simply because I think the automotives in US and the makers are just, it's too unpredictable at the moment. So I wouldn't get into the stock at the moment. I think about $47, 45 to 50 is quite reasonable, simply because of the trade war that is going to happen, and they always hit large car manufacturers quite hard because they are always going to be hitting stuff like electronics, aluminium, which they use, and just auto parts in general. So it's quite, I don't like it that much. So you gotta be wary when trading stocks like this. Now, if you did like this video, please don't forget to like and subscribe. And of course, remember, this isn't financial advice, this is purely entertainment and education. Thanks for watching. And if you want me to do any other companies, please don't forget to leave them in the description below.